Hello, joining me today to discuss the oil industry's outlook from a service sector perspective is Lorenzo Simonelli, Chairman and CEO of Baker Hughes, one of the world's largest oilfield services companies. Hello, Lorenzo, and welcome to the program. Oil prices have staged a lofty rise year to date, floating around the $65 mark. Has this fed into your clients' capex spending plans? If not, what do you think will incentivize that? Higher oil prices, faster demand, recovery, price stability? What exactly?
Well, it's great to be with you, and thank you very much. As we look at 2021, we're cautiously optimistic that there is a recovery taking place. As you look at the vaccine rollouts that are happening globally, we do see demand starting to become more robust. And with that, as you've said, there's been a price increase from a Brent and WTI spot perspective. We see that this is going to continue as we go through the year, and second half and going into 2022, we should see free cash flows and also a remaining high oil price, which is really driven from the demand returning. And customers remain also prudent and also disciplined in their capital spending, which will say that prices remain high and there'll be more free cash flow actually within the industry.
Lorenzo, rig activity is one thing, rig pricing is another. Worldwide rigs are up 11% in Q1 as per your data, but this hasn't really translated into stronger pricing for you yet, has it? Hence, do you expect meaningful pricing increases to start for you? When exactly?
As you look at the industry, again, people are retaining their capital discipline, and clearly pricing will emerge as an outcome of as the industry develops. Our focus at Baker Hughes is on really margin and improving returns as we go forward. So, we won't be chasing volume around the globe, but we'll be focused on technology differentiation and also making sure that the margins and returns are there also for our customers and also for our shareholders.
Over in the United States, analysts think that this time is different for the shale players. There will be no going back to the eye-popping production growth rates of the past, especially that investors today have lost interest and capital restraint is the name of the game, as you rightly put it. You have close contacts in the US shale patches. What's your take on how will they perform in the next couple of years?
Well, and as you said, I think it's been discussed before, and we've said before also that we don't think North America is going to follow the same cyclical uptrend that it's seen other times around. We think that there is capital discipline within the E&P, in particular with the public E&P group. We also think that from an investor perspective, they're asking for the operators to be more capital disciplined. So we're encouraged to see that there is an improvement in the rig count, but we don't anticipate that the North America cycle will be that of the past. For the next 2 to 3 years, that capital discipline will be in place. And so there'll be a gradual improvement, but it won't be a large swing as we've seen previously. And, we've already been speaking to our customers and they're retaining that capital discipline. And we think there'll be continued international growth. And in the low-cost basins, that's where you'll see more of the uptick and the recovery.
Mm-hmm. Lorenzo, let's then talk geographically and step back and take a look at the global picture. What regions do you think will likely see high upstream growth recoveries in the next 12 months moving into 2022? And what kind of projects would they be? Would they be onshore, deepwater, LNG?
So as you look at the international scene, and we mentioned most recently also on our earnings call that we do see international recovery in the second half. You've got some areas that were very depressed in 2020 because of the pandemic. Looking at Latin America, we see recovery taking place there. We see also Russia recovering with some of its incremental production, and Middle East as well in the second half. As you look at the type of projects, clearly onshore, deep water we still think is challenged, and it will be difficult to go back to the 2019 number of projects. But LNG has been a bright spot. And most recently, we took up our forecast for what we see as being the required LNG installed base from previously 650 million tons to being between 700 and 800 million tons in 2030. And that's based on the big demand that we're seeing coming through from Southeast Asia and other developing nations. So there is a progression, and international remains robust heading into the second half of 21, but really going into 2022.
Let's discuss then our region. How would you characterize the current activity in the Middle East so far this year, and what's your expectations for the coming months?
Again, as you look at the Middle East, we have seen a positive momentum of recovery. Again, it's coming off a low base of 2020, just given the impact of the pandemic. And what we're seeing is the potential for second half recovery and also going into 2022. As you look at the low-cost basins and also the competitiveness of the region, we think it's well suited to taking advantage as that demand globally recovers and the Middle East being able to increase its production going into the second half. So again, we remain very present in conversations with our customers. I'd say there are already dialogues about the increases that are planned going into the second half.
Lorenzo, let's discuss digital transformation. The total value of contracts awarded to oil and gas service sector in 2020 was the lowest since 2004 by one count. The industry is getting tougher, no doubt. How important is digital transformation for your value creation, and how have you applied it to differentiate yourself from your competitors?
Digital transformation is a key theme that's going to continue to evolve. And really the fundamental is driving efficiencies and productivity in all operations. So we use it both internally ourselves in our processes by which we can provide capabilities to our main customers, but then also in the deployment of services and also capabilities to the customers. Great examples are remote operations, where we've got the capability now to drill wells by using a central location. We're also using artificial intelligence. We have a partnership with C3.ai, which again yields improvements in reducing non-productive time. As you go forward, digital transformation is all about taking waste out of processes that we execute today and also driving technology infusion. And we see it as a great opportunity. We're investing heavily, and also we've got a good foundation in condition monitoring, which captures critical equipment, also in our ability for remote operations and artificial intelligence. So we think that theme is going to continue, and we're seeing increasing engagements across the globe.
Talking about the globe, 2021 might well be the year that climate initiatives get more aggressive. This will necessarily speed up the energy transition. Has Baker Hughes been able to come up with a blueprint of how this transition can be transformed into new and, more importantly, profitable business lines?
Definitely. And as you say, it is an increasing theme. And I think the backdrop of 2020 has brought it really to a social discussion around the globe. At Baker Hughes, we started in 2019 really depicting ourselves as an energy technology company. We made our own net zero commitment to halve our emissions by 2030 and to be net zero by 2050. And we've progressively taken a three-pillar approach. The first is start to drive efficiencies in what we do today. And that can be by the deployment of digital transformation. It can be by the deployment of sensors and measuring capability. There's an IEA study that says you can reduce the footprint of carbon and greenhouse gases with available technology today by 37%. And we've got some great technologies and upgrade of equipment that we can deploy. Secondly, continuing to invest in new areas. And we're looking at non-metallic composites that really help to reduce the usage of steel for modules, as well as chemicals that can further reduce the content of greenhouse gases, eliminating the emissions that come from the stacks. And looking at new frontiers is really the third pillar, such as CCUS, such as hydrogen, such as continuing the drive towards natural gas versus coal, which is, again, much better for the environment. And we see these markets developing. Most recently, we said from a CCUS perspective, we see a market opportunity addressable of $35 to $40 billion by 2030. As you look at hydrogen, an addressable market of 25 to 30 billion by 2030. So these things will take some time, but we're investing. We've made announcements on carbon capture capabilities and processes that we have in-house today, and new investments we've made, as well as on hydrogen. So we see it as a key area where Baker Hughes going forward will actually enable the sector of oil and gas, as well as other sectors such as cement, pulp and paper, really to reduce their carbon footprint.
Lorenzo Simonelli, the chairman and CEO of Baker Hughes, thank you so much for taking the time and being with us on the show.